we come abroad. All of those play a big part in the attractiveness of Indian students for these US financial institutions. The other piece is, if you look at some of the education loans that are available to Indian students from Indian financial institutions, they are pretty limited. When I say limited, I mean pretty high interest rate, requiring a lot of collateral to go with it, and they are in Indian rupees compared to US dollars. So it makes a big difference in when you're looking at foreign education, getting your money in US denominated loans versus Indian rupees. Though we help with both, but there is a difference between getting a US denominated loan. And then um, the other piece is, when I consider the community that we have, right? So we have a large and well settled Indian American community, like folks like myself, right, who have settled here, been here for a few years, and we want to make sure we are welcoming other Indian students that may have friends or relatives in the US, and they're willing to extend help to Indian students coming from India on their education journey. So with that, we'll kind of go through a little bit about the loans out here, to talk about just the difference in a couple of loans. And before I go there, let me pause for a second. Feel free to ask any questions in the chat, or just put it in. Yeah, ask the question in the chat, and we'll probably get to it at the end of the presentation, and we'll answer all the questions. So before I jump into that, wanted to see if there are any questions right now we could answer in the chat. So I'll pause there for a second. And that's okay if it is not. We can continue. I just want to make sure I give you a chance to um, get the answer. So one of the questions was, are the US dominated loans only for students who want to study in the US? So the answer is majority of them are for the US students, but once we contact and talk to you, we can understand your profile a little bit better, and we can help you with other countries as well. So I encourage you to reach out. Okay. So real quick on the loans overview, when you think about a US denominated loan versus an Indian loan, right? The first piece, and this is the most critical piece, is the interest rate, right? A US loan is anywhere between 3 and 7% interest rate on that loan. That's dropping even more, given all the economic conditions right now. Compare that to an Indian loan, where, as you guys are well aware, Indian banks requiring 9 to 14, often 16% interest rate, which is very, very burdensome for not just the student, but the parents in India as well. Yeah, the second piece is how smooth and how quickly can we get the application done. And what I mean by done is from the time you apply and give your documents till the money is actually sent to university, what's the end-to-end time, right? Um, and for US loans, we're talking 2 to 3 weeks is when we can actually do the end-to-end process. Um, we do help with a lot of Indian loans as well, and we do know that the time for that is between 8 to 12 weeks. So we just want to make sure that there are expectations set when you think about the differences in the application processing timing. Uh, the third piece, which is actually very important, is, and I found that out when I came to study here, is I thought I had to worry about getting the money, sending the money to my university, making sure that the check doesn't get lost in the mail, all those issues. But the US loans are actually disbursed directly to the university. I don't even see the money, right? And that's really helpful because it's a direct transaction between the financial institution and the US university. While in India, a loan is disbursed to you guys, the parents, or to the students, then you have to figure out how to get it to the university. So it's a little bit complicated. As I said, we do help with both, but just understanding the differences is important. Um, and then the expense, what is covered by the loan, right? So in the US loan, 100% of your expenses are funded. And when I mean by 100%, we're talking about your tuition, which is the biggest uh, aspect of the loan, but also your room and board, your living expenses, all of those are covered in the US loans. And in Indian loans, 50 to 60% of the expenses are covered. You have to provide a lot of justification for the amounts you're needing to borrow, and then you can actually get that loan. The next point is about repayment flexibility. So for folks that may not be aware, when you think about repaying your loan, you want to be very conscious about how flexible is it? Like, are you going to be burdened the minute you graduate or while you're in school? Or can you actually take your time, settle in life, find a job, and then start repaying? So the US loans actually give you that flexibility, right? From the time you graduate, you can start repaying. Um, as you find a job, you get well settled, you start earning more, and you start paying off, and that's the repayment flexibility that's provided. The Indian loans also provide that repayment flexibility as well. And this one, the last one, is definitely very helpful for the parents. There is no collateral needed, so you don't need to mortgage your house, you don't need to provide your fixed deposit, you don't need to provide your land. None of that is needed in the U.S. loans. And as you guys know, in the Indian loans, you need to provide a lot of that collateral to get to secure your loan. So this at a very high level is just, I mean, there's a lot of details around this that we can talk to on a one-on-one basis with you, but they said at a very high level the difference between the two loan programs. And as I said, we do help with both. So we would need to work with you on a case by case basis, really understand your profile, understand what your needs are, and then we can cater the right program for you.
Awesome.
So, Kaushal, you want to talk a little bit about the Bharat education loans?
Yeah, do that. So I'll just, yeah, great, awesome. Thank you for moving to the slide. So I'll talk a little bit about what Paras has been doing, specifically around this. So Paras has been doing this since about 2002 for over 15 years. Thousands of students have taken the Paras education loan and have studied abroad. I know some of them have been gracious enough even to join the call. And Advocate Amit Mehta is going to be speaking. We'll talk with him a little bit as well. And there's a few other students who are on the call. So there's thousands of students who have gone, and I think that's something that's a testament to students understanding the power of this. Um, right? There are several loan products that are available through Paras, and I know even within the US denominated loans, the US dollar denominated loans, there are different types of loans that you can take and different ways you can structure your loan as well. So Paras works with you closely to process that and to set that up in a way that works best for you, uh, both from your career aspirations as well as what you think you'll be able to do and how you want to operate while you're in college as well as while you're out of college. Um, it takes about 2 weeks at the very least, but typically about 3 weeks or so to process these loans. It's a fairly quick process. It's all digital. It's all online. But there's information that we capture about you, as well as we'll ask for information potentially from someone else in the US who's co-signing for you. And we'll take all of that information, put into the risk model, and then we essentially come back typically within about 2 weeks while working along with our lending partners to ascertain the right loan with you, right? Um, uh, and we've been doing this for a long time, and we've focused primarily on the financing of your education, but we also do work with students, to help you choose your university and so on. We have a few great partners that we also work with who help you choose the right colleges. But then once you've at least gotten admits from your top three or four colleges, is when we will work with you most closely to actually um, you know get the entire loan process started, and then help you with getting your visa documentation done, and I'll talk about that a little bit as well, where we help that process specifically, and as well as the actual disbursement of the loan. So we're with you all the way till your first payment hits your university, as well as ideally what we like to work with is also making all of our students a lot more financially um, better, sort of just improve their personal finance knowledge, and work with them on counseling them also how to make sure how to think about their loan repayment and how they should think about it while they're in college and out of college. We work with you through that process as well. um, awesome. If you can go to the next slide. So can you go to the next slide, please? I'm not sure if it's not working. Okay, I think it's frozen. 1 second.
I just moved to the next slide. Do you see it?
No, I don't see it, surprisingly. Yeah, okay, I see it now. Awesome. So I think that the key things that at least I know we've been able to all benefit from a Paras loan have been, first and foremost, honestly, even before anything out here, it's about becoming financially independent. And I think all of the students who are thinking of going abroad, one of the key things they have, one of the key things that students um, are also looking for over and above the um, uh, over and above the education itself, but is also the experience of becoming independent. It's something that we hear repeatedly. It's a key reason that people want. They of course want the great education that you get access to, but they also want to, start experiencing life independently, especially in a different country. From that perspective, and I think that's very admirable and very important. What we think is also just as important is becoming financially independent. And essentially, you are leaving the nest, the ship is leaving the harbor. You should be thinking about how do you stand on your own 2 feet going forward. And I think to me, that's the most important thing is, you are the one taking on that loan as a student, or if you're a parent on the call, then it's your child who's taking up that loan themselves. It's not the parent, it's not anyone else, it's the student taking the loan himself or herself. I think that is a really important aspect to think about, because then mindset shifts, your responsibilities change, not just around studying, but also about making sure that you're thinking about how do you now operate as your own individual going forward. So, taking it, so taking a step forward more specifically around Paras loans, the interest rates, because these are all US dollar denominated loans, these are all in partnerships with lending institutions and NBFCs in the US. The interest rates are tied to the US federal interest rate and the prime lending rate, or the LIBOR. And as a result, they are closer to about 3%. Right now, we've even seen students process loans with less than about 2.4% and 1.8%. So the interest rates are a huge factor in changing the way you think about what you are signing up for, because you're getting access to the finance you need, not letting finance be the deter into achieving your educational aspirations. But it is but it is something that uh, because it's coming from there and it's tied to the financial system, the interest rates are much more favorable than you would get from any of the sort of developing countries' interest rates, which are closer to about 12%, starting at about 12%, going up to 15%, 18% as well. So it's a huge difference, especially as you think of the financial responsibility that you're taking on as a student, or as a parent, you're thinking about the financial responsibility that your child is taking on. You want to, of course, be cognizant of that. And it's a very important thing, because this is not a short-term responsibility. You're taking it on now. It's an investment into your education, but you want to make sure that you're doing it in a financially sensible way. So one of the key things is sort of the interest rate. The other thing is there's no limit, or rather, it's really limited by what the university certifies is the amount that you need for your education. So this is a education focused one. You can't take this to go start a business or something like that. But and that's sort of why the rates are so favorable. But as a as a education focused loan, it is primarily for for not just your tuition, but also, as Hitab mentioned earlier, uh, living, board, room, books, which are not cheap at all. Your, anything that the university has put into your I-20s number, into what it'll take for you to study in the West, that number is the limit to what you can get. It isn't some limit defined by the lending capacity of the bank, or trying to reduce risk by the bank, or any of those things, which is again something that you'll see from many other institutions, who are based in India and elsewhere as well. Um, awesome. Um, the other key thing, I think this is very important, and I think both as a student, I know I was something I cared about a lot, is not putting the burden on my parents. And for the parents, it's about not being able to um, it's about not being able to maybe even be able to give the collateral that eastern banking institution may need, right? So I think the collateral is a really important aspect. The fact that you don't need a collateral when you want to study abroad. For the parent, there is no response, there's no burden on them. That's a really important aspect. um, I think, and lastly, you can repay over 15 years, and I think that is a much longer. So if you want to take a year off, you want to take, we've seen students who take a gap year after they finish education, sometimes to go do some humanitarian work in other parts of the world. You can do that. People have gone and done the masters after their undergrad. They've gone into maybe do their PhD after doing their masters. You can do those things without without being worried that, I have to repay my loan in 3 years or 4 years or 5 years. Awesome. And I think lastly, all of this we help with providing the documentation you need, both to get your admit letter when you your final admission letter from the university. So typically they'll give you a conditional admit. You just have to show proof of finance, and then they give you the final admit. So we help you with making sure you get that final admit letter, which you also need when you apply for your visa, and also providing the proof that, look, you have the funds arranged for when you're going to go study there. And that's the biggest thing, that the visa, that and making sure that they think you're going to come back, are the two biggest things that the US visa um, officer is looking for when you go to apply for your F1 visa. So making sure that that doesn't reject reasons like lack of funds, right? That's the sort of biggest reason we've sort of often seen. And so um, and I think so. So that's the major thing that we also make sure about.
So I want to make sure.
Yeah, go ahead.
Yeah. So I know we have a lot more we can go into. There's a lot more we can go into, but I think more than us talking, it might be helpful for you to listen from actual users who've gone through the Paras process. So I wanted to introduce a couple of people on the call. One is Alvora. She's a mother. She's that's gone through the Paras loan process for her son. So she's going to talk about kind of a little bit of her process as a parent, and feel free to again ask questions in the chat. And then we're also going to have Amit give his perspective on the process that they went through. So with that, I want to turn it over to Sheetal to give her experience. Kausha, you want to unmute Sheetal?
I have unmuted, I thought. Give me 1 second. I'll just check. Sorry. Okay, you should be unmuted now, Sheetal.
Yeah. Hi, everybody.
Yeah, this is the fun
So
of doing this remotely, right? We're doing it from different parts of the world. Okay.
hi. So yeah, my son is Ansh Vora, and we are based here in Mumbai. And yes, we have availed of the Paras loans. He is a freshman at a private liberal arts university in California, Claremont McKenna, being one of, I would say, the steeper end of the spectrum because the fees are in the range of $75,000. And to be honest, one of like as parents, we were very clear that along with the undergraduate experience, very very important that financial independence and financial intelligence. And as Hetav and Kaushal have mentioned out here, that the student takes the loan, so that responsibility, that was a goal for my husband and myself. He is our only son, and to be vaguely honest, not that we kind of needed to go into the loan option, but the loan option has so many benefits because I have seen it firsthand that it's gotten made him so independent in terms of financially being alert and aware of what it entails to take a loan. Just a few examples, that when even the COVID struck and the pandemic was the lockdown was implemented and they were asked to vacate their campus, the first thing he got in touch with his with his international office, that what happens to my lodging boarding fees, will I see that reimbursed, because my loan will be affected, his interest is affected. Number two, because he has to pay his interest, he is managing and tackling 2 jobs on campus. He understands the value of keeping his GPA up, because his GPA is going to get him a job, and his job is important for him to repay his loan. So there are ripple effects to kind of going ahead with this loan option. It's not, of course it's a great option because you don't have to park your money $75,000 even annually. And my husband kind of made it clear to him that if I can even take a loan for your ticket, that's what I would do, because you need to understand that you need to repay this. So there are many benefits with this. It keeps you on track. He kind of ensures that he's not partying every week. He says he will work one weekend because that helps him earn more, because he has to repay his interest. So it gets you to kind of balance your academics, not get carried away with the US life sometimes, ensures that you push yourself in order to ensure to kind of make sure that you're getting the best job on campus, which is also paying the best. And you don't slip in your GPA because you need that job. Being an international applicant, it's not the easiest getting a job, but it kind of makes you push yourself, because that I don't get my job, how do I pay my interest? And I better not slip in my GPA because I need that job. So just tying it down back, that yes, financially it definitely really does not keep us under that stress of a loan, keeps him walking on eggshells, making sure that even right now, how can he refinance his loan, because the loan is being refinanced at a lower rate. So keeps him also in on that same track of financially intelligent, financially alert, and in the same vein as being more independent. So yeah, we are parents who firsthand taken almost $100,000 now, because we've also taken the loan for the next semester of his sophomore, and we are very happy so far with our decision. And I would definitely advocate this because it has. I've seen the benefit as parents and as an individual. My son has kind of grown through this. That's about it. Thank you, Paras, and thank you, guys. You guys are doing a great job out here. That's it from my end.
Awesome. Thank you so much. I'm going to invite advocate Amit Mehta. He had taken a Paras loan, I want to say 14 years ago, maybe a little earlier. Amit, if you can introduce yourself and talk a little bit about what your experience has been when you took the loan, as well as what your journey has been ever since.
Yeah, that's good.
Hi, thank you very much, Hetav, Kaushal, and of course, my philosopher guide, Mr. Arun Bhai Sanghvi. It's been a long journey being associated with Paras Education. And I just remember my days with Paras Education. The first time when I met Arun Bhai, it was actually a curfew day. It was a curfew in Mumbai. And we fixed up a time somewhere in the evening around 4 o'clock. So it was a big challenge to reach in the evening around 4 o'clock when it was a curfew day. And in those days, I'm talking somewhere in the year of about 1998, 99 right now. And at that point of time, the offices were in Lower Parel. The Bharat station was in Lower Parel. So I happened to meet him on a curfew day. And it was a wonderful experience when I gave my profile to him, and he approved it immediately. And he told me what the procedure is all about. And within about a month's time, I already got a sanction letter from him. And let me give you my background first. I'm basically engineer by background, and I did my MBA from Leeds University Business School, and my merger acquisition from London Business School. So when the transition was there from Leeds and London Business School, that's the time when I approached Arun Bhai, for a loan. And of course, after that, I was at Tata Group for 8 years, and then I did my law during that time only. And then we are having a very big law firm today. We are a leading law firm in India today. But the base was always that loan which I got at that point of time. And at that point of time, the loan was for about 7 or 8%, if I correctly remember. Today, the loans are about 2 or 3%, and the repayment was also, very easily done over a period of about 12 years. So I think that base of that loan, and that loan which was an economical loan at that point of time, because the Indian loans were about 13%, and we got it about 7%. So it helped a lot and actually shaped the entire career. Today we are